Hi, this is Nilus Mattive from Money Markets TV. With Thanksgiving upon us, it's time to look forward toward the holiday season and 2012. So today, I want to tell you about 3 moves that you should make before the end of the year. Come tax day in 2012, I promise you'll thank me. The first thing to do is start thinking about tax loss harvesting. First, take a look at your investment portfolio and find any positions that are currently underwater. If you sell those positions now, you can deduct the loss. There are a couple ways to do this. If you also book gains for the year, you can offset them on a dollar-for-dollar basis with no limit. Or, if you recorded more losses than gains, you can use those losses to offset some ordinary income. The maximum you can offset is $3,000, or $1,500 if you're married and filing separately. But you can also carry additional losses forward for future tax years. This move is a no-brainer if you have losing positions that you doubt will ever come back. You'll not only get a tax break, but you can then take the proceeds from the sale and reinvest them in better long-term choices. And even if you have underwater positions that you want to continue holding for the longer term, you still might consider selling them at a loss for the tax advantage. That's because if you wait at least 30 days and then buy back the same positions, the loss will still count on your tax form. Of course, the risk to this strategy is that the stock could rebound over those 30 days and you'd miss out. But given the recent volatility in the markets, I'd imagine you'll have another chance to buy back in at a similar or even better price. The second thing to do before the new year is to make charitable contributions. As long as you give to a qualified organization and itemize your donations, you can deduct them. It's one of those rare tax items that helps you do well by doing good. And last but not least, establish a retirement account or make changes to your existing account. Some accounts, such as IRAs, give you all the way until April 15th to sock away money. But others, including an employer's 401k plan, must be established or funded by December 31st. If you've been slacking, there's still time for you to get something in there for this calendar year. Doing so will provide you with more money for the future, the possibility of matched contributions from your employer, and a nice break on this year's taxes. If you're self-employed, then you should definitely consider opening a solo 401k. They allow you to sock away as much as $49,000 in just the first year. But again, you have only until December 31st to establish the account and contribute any money that will count as the employee part of the overall contribution. Finally, this is also the time to consider changing any accounts you already have. For example, converting a traditional IRA to a Roth. With all of these moves, your own personal circumstances will dictate what makes the most sense. And you may be best served by talking to a tax professional to get more information on all the ins and outs. But my overall point is that, despite the holiday madness, this is the best time of the year to make important decisions that will affect you well into 2012 and beyond. I'm Nilus Mattive for Money and Markets TV. Thanks for watching.